What is a forbearance? Who qualifies for it? Should you be taking it right now? And does it affect your credit report? So stay tuned. We're going to talk with my friend Reed Clark from Silverton Mortgage right now. Hey, I am Jennifer Ray with Jennifer Ray Homes and Keller Williams. And today I have a special guest with me. This is Reed Clark of Silverton Mortgage. And I wanted to bring him on because there's a lot of talk going on about mortgages and forbearances. And because he is the expert in this field, I thought it best to bring him on to discuss this and find out if you should try to get a forbearance on your mortgage right now. So welcome, Reed.
Hey, Jennifer. Thanks for asking me.
Thanks for coming on. You're the expert, so I wanted to talk to you about it and get an idea of what are your thoughts on this whole applying for a forbearance.
Yeah, it's an interesting thing. I don't know if anybody's really an expert on this version of forbearance. I mean, there's always been the opportunity for a homeowner to work out a forbearance situation with their lender. For example, if they went into a hardship, rather than just not paying and face foreclosure, they would call their lender, and the lender would much rather work with them to get things settled. So it's always been there, but this version is different. So
my husband said to me, he goes, "Oh, we don't have to pay our mortgage for 3 months." And I'm like, no, that's not how it works. Explain to America. Exactly. Yes. So explain to America. I think there's a lot of people saying like, "Oh, great. We don't have to pay our mortgage." Who qualifies for this?
Got it. So when the government first announced this as part of that first wave of stimulus efforts, when they said a particular thing, everybody in the mortgage industry went, and you don't have to prove hardship. Because in the past, you always had to document that. You had to show the lender why you needed forbearance. This is probably a good idea to explain what forbearance means.
Right.
At this point. Okay, so forbearance means that you don't have to pay right now.
Mm-hmm.
It doesn't mean that you don't have to pay.
It's not
forgiveness. Exactly. Forgiveness would be where we say, Jennifer, you know what? You guys are having a hard time. Don't worry about making your payment this month. No big deal. We'll take care of it. Forbearance means, Mr. Homeowner, you don't have to make your payment now or next month. And in this situation, you don't even have to tell us that you've had, that you've lost your job or anything like that.
Okay, so in this situation, you do not have to show that either you have had COVID-19 or you have lost your job. No. There's nothing you have to show.
None. Okay. I do understand that one particular big lender has a question like, did you lose your job? But they can't base the forbearance on that. It is granted just from asking.
Okay. So pretty much anyone can qualify.
Yes.
Okay. Should you?
Let me say one thing. There is a question on that with people that are in jumbo loans, because jumbo loans are owned by particular banks, but I think that the banks will be pressured and they will actually grant that forbearance, even though it's not under the same rules as conventional loans.
Okay, so does this qualify for conventional, FHA, VA, any of the above?
Yes.
Okay.
Yes, absolutely.
Okay. So how long can you get a forbearance for?
The initial forbearance is up to 3 months, and it can be extended longer than that, up to 6. I believe that was the initial verbiage.
Is this going to affect your credit report? Your credit score, is it going to be marked as derogatory?
That's the wild card, Jennifer. In the past, historically, a forbearance did show up as derogatory on credit. And that means that Fannie Mae and Freddie Mac would not buy a new loan that had been in forbearance for within the previous 12 months. So it was a derogatory. Now, what's going to happen now on the credit report, we don't really know. And I will throw in one thing. Even though the forbearance situation has the potential to be a negative thing, if somebody's lost their job and they can't pay,
mm-hmm.
I'm thankful that opportunity is there for them,
right.
So And there's a moratorium on foreclosures, which you probably were going to ask me in a minute. So during this time, nobody's going to be foreclosed upon just because they can't make their mortgage payments.
Right, and that is a wonderful thing. My concern with this is that we're going to have a lot of people, the people who lost their jobs, absolutely, they should be doing this. What do you say to the people who are still working, who can make their payments? Should they take advantage of this?
Well, you said it a minute, you told me a minute ago that your husband, when he first heard about it, said, great, we don't have to make our mortgage payment. I was talking to a friend of mine who is very well off, and they said exactly the same thing. So, I don't know if I'll make my payment this month or not. Absolutely make your mortgage payment.
Right.
Because again, it's not payment forgiveness. It's not, you don't have to make your payment. It's, you don't have to make your payment right now, which is going to lead to the next question.
Right. So let's talk about that. You don't have to make your payment right now, but after this forbearance is up, whether it's, 1 month, 3 months, 6 months down the road, what happens to that money that you weren't paying? What happens? Do you owe it all at once? Does it go to the end of your mortgage? So instead of a 30-year, you now have a, 30 and a half year, what does it look like?
Yeah, it's one of basically 3 options, I think. You're going to either at the end of let's say that you went into forbearance for 3 months.
Mm-hmm.
And so let's see, you took forbearance for your April, May, and June payment. And then, you're back on your job or whatever, and the July payment comes due. Well, you've still got to deal with those 3 payments. And so the lender is going to approach the client. At that point, they're going to be the one that's proactive.
Mm-hmm.
The client's proactive, asking for the forbearance. At the end of forbearance, the servicer is going to be the one who's being proactive. So they're going to come and they're going to say, Mr. Homeowner, okay, we need to collect for those 3 months payments. Are you prepared to make that payment now? Well, most likely the answer to that's going to be no.
Because that 3 months, if you have $1,000 mortgage, that's going to be $3,000 that's due on the 4th month. Is that correct?
Plus that month.
So it's going to be $4,000 due on that 4th month. Right. And if you've not been working for the past 3 months, how are you going to afford a $4,000 mortgage now?
Exactly. So the next step would be, Mr. Homeowner, okay, let's take that difference and spread it out over the next 3, 6, 9 months. And the person would pay a little bit extra each month with the goal of being caught up at the end of 6 months or 9 months or whatever it is. And if that's not an option, probably the next thing that's going to happen is a loan modification, where they would actually do just what you said and take those 3 months and put it on the end of the note. And the reason it's a modification is because the original note has a maturity date. And so they're extending the maturity date on the note. And a loan modification is, it is a bit negative on credit. That has to be a year old before the client can do anything new on a mortgage and things like that.
So, okay, so it's not a refinance. It's not the same as a refinance.
No,
it would just be adding on to the end of the term.
Yep.
Okay.
And I'll tell you what I have seen people do, Jennifer, is folks that still have their job. I've seen people doing cash out refinances. That does a couple of things. First of all, they'll skip 1 or 2 months payments, but also it gives them, they can do a cash out and get some cash to tide them over for the next few months in case things do get dicey. So there's a lot of options, but back to the issue of forbearance. For the right person, it's the right decision. But if you can make your mortgage payment, you need to make your mortgage payment.
I would agree. Thank you so much, Reed. This is really informative. Just one more quick thing. What do interest rates look like right now? If I'm a buyer out looking, I know they're still really low, and that's still really enticing to buyers right now. So what does a typical conventional loan right now look like?
Looking, with say 5 or 10% down in good credit, you're looking at 3.25, 3.125%. Which is amazing. I mean, we're in the low 3s on 30-year fixed. But I'll tell you that, listen to this. A VA or FHA loan with a good credit score, 2.75%.
Wow. That is
30-year fixed. I mean, that's crazy.
That is crazy. I've never seen them this low, ever.
No.
I don't know that they'll even go any lower than this.
Yeah, I can't imagine.
That's amazing. Well, thank you so much. I appreciate you, and I appreciate everything that you do, and stay healthy.
Thank you, Jennifer. You too.
Thanks. Bye-bye.